Welcome back to another coffee chat with, as usual, Tiaan Herselman, head of Old Mutual Wealth Proposition, where today DFMs take center stage for the simple reason that we've seen a progression over the last 2 to 3 years of planners outsourcing investment capabilities to specialists in that particular field. Tiaan, it's not only just a DFM for Regulation 28 compliant portfolios or multi-asset funds. We definitely have seen this trend increase on our Old Mutual Wealth platform. Why do you think this is?
Thanks. It's good to be back again, Dave. I think people don't realize that before you and I start, we have 3 or 4 coffees. So when we sit here, all the caffeine is running through our systems. But I think if we look at the DFM world, as we've seen doing an analysis or thorough analysis of planners on our local platform, most planners are actually invested into an excess of 100 unit trust funds. Now, it's almost impossible in our view to do proper, consistent due diligence on 100 funds, which is actually a legislative requirement when giving investment advice. And to be fair, in all fairness to the planners, this can be expected when the investment industry as a whole offers financial planners the option to choose from more than 1,800 local unit trusts. That was the figure roughly at the end of December 2023. I mean, there were 63 new unit trust funds added in 2023 alone. And this in a country where we've actually seen the number of listings on the JSE drop from about 602,000 to just over 300 last year in 2023. And even globally, it doesn't get better. Globally, there are close to 140,000 unit trust funds that you can choose from, or as we refer to them as mutual funds, as a financial planner. So with all of this choice, more and more financial planners are actually outsourcing investment management to a trusted investment partner that can help them build bespoke portfolios for clients, both on the local front and the offshore front. And this simply, if you look at the benefits, results in them saving time, which helps them build more efficient and profitable practices. And I think this is the reason why we've seen the emergence of the DFM landscape, both in SA and specifically offshore. And when we did some of our own research through an external provider, we found that when financial planners were surveyed, 53% of them indicated that they would actually be increasing their clients' exposure to some form of a DFM model into the future. So we only see this trend actually continuing well into the future.
Now, Tiaan, you've spoken about choice, but it's a little bit more nuanced than just choice and taking away the fund picking or stock picking element from financial planners. In your view, we have obviously a capability within Old Mutual Wealth, our DFM capability called tailored fund portfolios. What are the benefits for a financial planner to use that within the Old Mutual Wealth platform?
I think you're right, Dave. It's a bit more nuanced than just that. And as you've mentioned, here at Old Mutual Wealth, we have an in-house DFM solution called Tailored Fund Portfolios, or as we refer to it, TFP. Now, this TFP solution is specifically designed to partner with a financial advisory practice, giving the financial advisor access to a comprehensive range of investment solutions that cover all of their typical clients' needs. And we've always utilized a multi-managed approach across different asset classes, giving more diversification to the planner and their end client, and ensuring that they have researched and proven diversified portfolios that are inflation target linked to help them meet their overall goals. We've also built various portfolios that are structured to reduce the overall volatility, which we've seen can erode a retiree's capital when there's a lot of short-term volatility in the starting period when drawing an income. But we still ensure that they get growth on their assets to put the client in the best position to have their capital outlast them well into retirement. And if you look at the different managers, I mentioned that we are a multi-manager solution. In our local solutions, as part of our equity building blocks, we use large asset managers like 91, M&G and Coronation. And we also include some smaller boutiques that are a little bit more nimble, such as Larium, 36ONE and Battalier Capital. For our fixed income and bond solutions, here we use Future Growth, Prescient, Coronation and MMG, and we utilize Old Mutual and Prescient on the offshore components. Now this just shows you, even on the local side, we use the best of breed managers for the financial planner and their clients, giving them that diversification within the models. If we look at the offshore solutions, here we offer both active and passive solutions depending on the financial planner's preferences. And we utilize well-known big managers such as Jupiter Merian, Vanguard and Baillie Gifford. Now, the one thing in our DFM models that we are very aware of is being cost effective, and we are very aware of costs. So when we construct these portfolios, we use certain measures to our advantage, such as our size, when negotiating with asset managers to keep the overall EAC to the planner and to the clients as low as possible. And another big benefit is that whilst we do have tried and tested house view solutions that we can offer financial planners, we will partner with a financial advisory practice to build a bespoke solution to fit the needs of any client base. So if there are some asset managers or elements of the portfolio that they want to be a bit more bespoke, we are open to having those conversations with the practice as well.
So Tiaan, it's more than just outsourcing your investment management to a DFM. And as we know, not all DFMs are created equal. There are certain unique characteristics to our tailored fund portfolio offering that planners can benefit from. Care to expand on that?
Absolutely. At Tailored Fund Portfolios, we don't just build portfolios, we actually partner with financial planners to help them achieve 4 key things. The first one is saving time, spending less time preparing for review meetings, getting together all of the investment statements, which secondly reduces their risk, because now when you've simplified your practice from 100 funds or 150 funds down to a couple of key models, you're actually taking away a lot of the due diligence and risk. And that helps them thirdly bring in more clients, because now they can spend their time where it actually matters, in front of clients. And this ultimately leads to the 4th benefit, creating and building greater value in their practices.
Now, Tiaan, I'm going to push you on this point. Can you make those 4 points practical in a financial advisor's life?
Absolutely, Dave. So the benefits are always in the how. So the question is simply, how does TFP help you save time? Well, I think firstly, they enable an efficient client review process, which saves the planner time, which will ultimately lead to much better high-quality client reviews and engagements. Furthermore, they also add greater value by alleviating the pressure on advice fees by offering lower investment fees. This value-for-money approach competes head-on with popular balance funds on performance at a much lower cost. And then some other very important benefits, if I ignore those 4, are also things such as the following. So firstly, we offer advisors exposure to world-class investment support. We save our advisors time by taking away all the due diligence work associated with fund picking, market research, and we also give the advisor everything they need directly to their inbox to take our solutions to market, like fund fact sheets, performance analysis, newsletters, as well as a holistic quarterly update and review created by the portfolio manager of the model. We also provide a catalog of supporting material written for the end client to help advisors explain concepts such as fees, how to read fund fact sheets, and actually even how interest rates impact them and their investments. And I think secondly is reporting. So we provide a comprehensive book report to help the advisor initially get a clear view on where their clients are invested and to help them get new clients. We'll do a review of the client's current holdings and give a comprehensive comparison of the appropriate TFP solution where we actually think it fits in. And then I think the one thing that really sets us apart is that thirdly, we actually offer bespoke retirement and Sharia portfolios. So we can build specialized portfolios like our retirement income solutions or Sharia compliant portfolios to ensure that we cater for all the needs of the advisor's client base. On the retirement side specifically, our ability to reduce volatility through some of our solutions such as the Absolute Smooth Growth portfolio is a significant benefit to retirees, and we can put that into a model for a financial planner. Furthermore, giving financial planners access to shared resources. What makes us really stand out is that we really believe in partnership, and we actually deliver on this every single day with all of our planner engagements. As one of our partners, you'll get access to a team of investment and business development experts, including direct contact with our portfolio managers, actually building the models, and analysts that can take on the investment research on your behalf whilst you focus on where you add value as the advisor, which is helping your clients bridge the gap between their current financial reality and their ideal reality. And lastly, I think one of the biggest benefits we have in Old Mutual Wealth and with our DFM solutions is that when building bespoke investment solutions, we can build ones that actually tie up to our financial planning technology set. So recently, LinkTag did a technology survey to all financial planners, and our flagship financial planning technology, the Wealth Integrator, was one of the highest rated financial planning technology stacks in the market amongst all the financial planners. And for those planners that utilize our financial planning technology, they get the peace of mind knowing that the inflation-based returns that they are modeling in our Wealth Integrator financial planning technology toolset can seamlessly tie up to one of our TFP models, ensuring that there is seamless alignment between their financial planning and the investment management. And I think that is the how. These are the benefits of our TFP solutions, our own in-house DFM solution, and that is what sets us apart from our competitors.
Thanks, Tiaan. It certainly is quite a challenging environment out there for financial planners, having to navigate the whole compliance issue and reporting while still having robust conversations with their clients. Join us again for another Old Mutual Wealth Debrief Exchange.